Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the things I think we've learned this earnings season is that scale is really what matters the most in social networks. There's just no replacement for it. Scale is what's going to attract advertisers. It's going to allow you to leverage the operating expenses that you have. And there's really only one company that has the most scale in social media. That is Meta Platforms. Meta is outperforming almost all of its rivals, Snap, Pinterest. We can lump Reddit in there despite the fact that they're not a public company. And the numbers really back this up. So is Meta the only investable social media platform? I think that's actually the case today. And I want to explain why. My name's Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you enjoy this video, check out my newsletter, Asymmetric Investing. Got a link to that in the show notes. And I want to start with a couple of charts from Koifin. The first one is the gross profit for social media companies. I have Meta, Pinterest, and Snap here. And you can see that Meta is by far generating the most gross profit margin, nearly 80%. Pinterest is up there, but starting to come down 75%. And Snap is really struggling, less than a 60% gross margin. Now, this is gross profit. So this is not measuring things like R&D and product development. This is measuring what does it cost to actually deliver the product that you're delivering, and then how much money you're making from it. So typically margins are going to be in that 70 to 80% range, but you can see that Meta is a cut above the rest. And the fact that it has scale means that this operating income margin chart looks a lot better at Meta. 18.7% operating income margin over the last 12 months at Meta. Pinterest is negative. Snap is extremely negative at negative 30%. And it looks like the trends are getting worse for both of those companies. Now, Meta's margin has come down as well. Part of that is we're reversing some of the spending that was going on during the pandemic. There was changes to app tracking transparency, which has hurt margins for all kinds of technology companies. But again, Meta is the one that stands above the rest. So why is this the case? And this is where I think we need to think about operations and the way that social media works as a winner-take-all market. This is an industry that I think fits nicely into the smiling curve concept. What this is that the value in an industry accrues to the companies with the most scale or the best niches. So either you have billions of users the way that Meta does, or you're serving a very valuable niche, maybe as a single creator, or even a small social media network that's focused on one industry. Common stock in the finance industry would be an example of that. Where you don't want to be is stuck in the middle, at the bottom of this trough in the smiling curve, where maybe you have hundreds of millions of users, but when an advertiser is thinking about where do they want to spend their money, do they want to put money and effort into building campaigns for Snap and for Pinterest? Or do they want to just go to the big dog at Meta Platforms where you can access Instagram, the Facebook app, all of their platforms, all something that is scalable, measurable. They just have more money to put into building out these platforms. And that's something that builds upon itself. More profits in these businesses means you can pour more money into making them even better, and that extends your advantage. The challenge is, I don't think there's any changing this dynamic. Meta has clearly won in social media, and without some sort of major change from a technology standpoint or new products, what is going to change this? Why would people move to Snapchat or Twitter or Pinterest instead of just staying on Facebook and Instagram where they're comfortable, where they have followings? So I think this is going to be the case for a very long time. And it makes it really tough to make an investment case for companies like Pinterest and Snapchat. We have seen that over the last 6 months, that the companies that are strong in this business continue to get stronger. At the end of the day, I think there's only one investable company, and that is Meta. Now, that said, I don't have a position in Meta, but I think you have to respect the business that Mark Zuckerberg has built there. What do you think about the dynamics in social media? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.